An overview of US-China trade war, tariffs, tech battles, and the future of global power. Today, we're going to talk about a really interesting and complex topic. Hey, welcome to the VFT World Watch series. President Trump is back in the White House. He famously initiated the US-China trade war back in 2018, but what's next now that he's returned? Let's dive into the hidden realities to uncover what the future might hold. The relationship between the US and China during President Trump's term, and how things have evolved under President Biden. This period has been marked by significant tensions, especially in trade, technology, and economic policy, and understanding these events is crucial to making sense of current global trends. Let's start by looking back at 2018. At that time, the US and China were two of the largest trading partners in the world, but tensions had been building for years. President Trump's administration raised concerns about what they viewed as unfair trade practices by China, including intellectual property issues and policies requiring foreign companies to share technology when operating in China. In response, the US imposed tariffs on Chinese goods, which triggered what's now known as the US-China trade war. China responded with its own tariffs on American goods. This escalation affected industries like agriculture, manufacturing, and technology. The idea behind these tariffs was to reduce the U.S. trade deficit with China and push for changes in trade practices. While some argued that it might help protect American jobs and businesses in the long run, others pointed out that the tariffs led to increased costs, disrupted supply chains, and forced companies to rethink their sourcing and production strategies. Fast forward to early 2020, after nearly 2 years of negotiations, the two countries signed the Phase 1 trade deal. China agreed to increase its purchases of U.S. goods and services by $200 billion over 2 years, while the U.S. scaled back some tariffs but left many in place. However, shortly after the deal was signed, the COVID-19 pandemic hit, which disrupted global trade and made it difficult for China to meet its commitments. Beyond trade, another significant area of tension was technology. The U.S. took measures against Chinese tech companies, including Huawei and ZTE, citing concerns over national security and the potential for surveillance through Chinese-built telecommunications infrastructure. Restrictions were also proposed on apps like TikTok and WeChat, arguing that they posed risks to data privacy. Now, let's move into President Biden's term. Although many expected a shift in tone and policy direction, it's important to note that several of the key measures implemented during Trump's term remained in place. In fact, under Biden, the U.S. has continued to take a tough stance on China, particularly in the area of technology. One major focus has been on semiconductors, which are critical components in everything from smartphones to military systems. The Biden administration has placed restrictions on the export of advanced semiconductor chips and related technologies to China, aiming to curb China's ability to develop cutting-edge technologies like artificial intelligence and quantum computing. The U.S. has also worked closely with allies, such as Japan, South Korea, and the Netherlands, to coordinate restrictions on the export of chip-making equipment to China. In addition, efforts to ban or heavily regulate TikTok have continued under Biden. Concerns over data security and the potential for Chinese government influence remain a key issue. While TikTok hasn't been outright banned in the US, there have been ongoing discussions about forcing its parent company. Under Biden, there has also been a renewed focus on strengthening domestic manufacturing of critical technologies. This led to the passing of the CHIPS and Science Act of 2022, which allocates billions of dollars in subsidies and incentives to boost semiconductor manufacturing within the US and reduce reliance on foreign suppliers. The goal is to enhance U.S. competitiveness in key industries, and mitigate the risks posed by supply chain disruptions. On the geopolitical front, tensions remain high, particularly over issues like Taiwan and the South China Sea. The U.S. has continued to support Taiwan, which China views as a breakaway province, and this has added another layer of complexity to the bilateral relationship. Despite these tensions, economic ties between the two countries remain strong. China is still one of the US's largest trading partners, and both countries continue to rely on each other in various sectors. However, What's clear is that the relationship has shifted from being purely cooperative to being more competitive, especially in strategic areas like technology and supply chains. In response to the US-China trade war, China has significantly invested in domestic semiconductor production, with companies like SMIC and Tsinghua Unigroup working to reduce dependence on foreign chips, such as Kirin processors. Huawei has also developed HarmonyOS, a homegrown operating system to replace Android in its smartphones and other devices, reducing reliance on US software. These moves reflect China's broader strategy to build a self-sufficient technology ecosystem, with Huawei playing a key role in driving innovation in both chips and operating systems. China's GDP growth is projected to slow to 4.5% in 2025, driven by global economic instability, weak real estate market, ongoing US-China trade tensions, and domestic adjustments, resulting in a large scale of job loss in China. Meanwhile, the US Federal Reserve raised interest rates from 0.25% in early 2022 to 5.25% by mid-2023 to curb inflation, but has recently reduced them to 4.25% by late 2024. This shift, alongside rising economic uncertainty, has contributed to the soaring price of gold, as investors seek safe haven assets amid global financial volatility. Looking ahead, it's likely that this dynamic will continue, with both countries seeking to protect their national interests while remaining economically intertwined. The future of US-China relations will be critical for businesses, policymakers, and global stability. If you enjoyed this video, like, share, and subscribe to stay updated on the latest trends and predictions. Don't miss out. Join the conversation.